I actually had a question for Peter, just to see if he has the revisions yet for the prior month.
They were 50,000.
Up 50,000.
Yeah, so that
up 50,000 October, November.
Yeah, so really a good report, other than wages obviously not moving, which is the big concern we've talked about. We're not seeing enough movement. We've been talking about that for years now, and that's still a concern that one data point we're not getting any movement in.
I'd say it was the number one data point that the bulls were looking for, is that they finally get wage growth. They didn't. It's interesting.
2.5% though is in line with where it was at the end of the year.
But construction was a big number, and newsflash, I mean, it was like springtime in part of the wintertime. And I dare say that people like to back out that for the retail sales, but they don't include that in today's, they'll definitely paint this jobs report as good. What I'm very concerned with, and I think the market will be too, is that the Federal Reserve does one more rate hike into what is a definitive manufacturing slowdown.
If it's only, Steve Cortes, if it's only one rate hike, that would be less than what some of these Fed guys are talking about. You're hearing as John Hilsenrath pointed out, penciled in 4 for the year.
Right. No, I think Wall Street consensus right now is 3 or 4 hikes in 2016. By the way, I happen to think that would be disastrous for the economy right now. The fact that the Fed finally decided, the Fed missed its window. It should have been normalizing rates a long time ago. The fact that it's raising rates now into a cyclical downturn, and Keith is right, there's no debating we are already in a profit recession. There's a lot of debate about whether or not we're going into an overall recession. I happen to think we are headed that way. The fact that the Fed raised rates into that kind of a cyclical downturn, I think is incredibly dangerous. And by the way, don't take my word for it. Look at global markets. Look at what they have done so far to start 2016. It's been disastrous. China cannot handle a normalizing Fed, and I think that's been proven by markets.
I want to bring in somebody very special, the host of this program and the moderator of the upcoming Republican presidential debate. Maria Bartiromo is on the phone. Maria.
Hey there, Dagan. How are you?
I'm great. I hope you're terrific as well. What do you make of this jobs report?
I think it's obviously a much better than expected number, and it is a strong number. And it's, once again, more evidence that slowly but surely we are seeing improvement in the jobs picture, and that's really where the improvement in the economy has been. I mean, I think it's interesting that you see a lift in construction and obviously services. It's a services economy. That's where you would expect the improvement, and that's where you're getting it. And obviously in the mining area is where you're seeing the weakness, because that's where you've seen the weakness. As Keith constantly points out, the commodities complex collapse is really where the weakness is. But I think, you have to look at this number as a real positive, and you have to look at this number as a continuation of what we've been seeing, and that is a slow but sure build-up and a recovery in the jobs portion of the economy. We know that the industrial side of the economy has been weak. That continues, and the same issues that have bogged this economy are still there, like the labor participation rate, like the wages issue. So you've still got those same issues, but you're still seeing that recovery slow but sure in the jobs market, and it does point to good news.
Maria, you are connected with business leaders around the globe here in the United States. What have they been telling you in the last week with this kind of volatility? Are they shaken? And how would you compare it to market sell-offs that we've witnessed over the years?
Dagan, I think it's very much in line with what we have discussed on the show. I mean, I was with a major retail executive last night, and he said to me, it's horrible out there. I mean, people are not shopping. You look in the stores, it's very quiet. The only piece of vibrancy is really the online area, and we talked a lot about the euphoria and vibrancy around Amazon, because that's really where it is. So, I don't think it's different than, what we already knew. It's very weak out there. This is the kind of news, this jobs number, that is going to, slowly but surely help people get out there, because it's a behavioral thing. When you are afraid of your job, that you're going to lose your job, that your neighbor may lose their job, it's going to dictate your behavior. You're not going to go out to the stores and spend a lot of money. You're not going to go and buy big-ticket items. That's why we keep seeing the weakness in the durable goods side of the economy and the big-ticket item side of things. So, I think most executives out there are still sort of in a slog. They're slogging through it. It has not been a good story. Most people did get the macro picture wrong in 2015, and 2016 is still an open question. I think one of the key things that we want to watch for in the next couple of months is where is the investment from business? And I think one of the key questions is when you see all this M&A that we've been seeing, I have no doubt that the M&A story is going to continue in a very euphoric way in 16. But the question is, are we seeing lending, by the J.P. Morgans of the world? Are we seeing lending to companies that money is going toward investment, or are we seeing that money go toward deals? Okay, are we going to see the lending environment pick up because companies are actually wanting to borrow with low interest rates to actually invest in R&D, invest in their businesses, invest, in some of the areas that you would actually see construction strength and, investment in business rather than borrowing money to do another deal so that they can acquire growth? Because that's really what you've been seeing. When you don't have a lot of growth, you acquire growth. And that's what really the story of 2015 was. But I think you have to look at this number as a positive. You have to recognize that this has been a slog, but it is getting better slowly but surely as far as the jobs picture is concerned. And I think what I'm going to be focused on, what companies are doing in terms of investment, are we going to see a shift in that in the next couple of months? And are we going to see people on the consumer side start actually spending money? The truth is, this number is good. This market obviously needed a good number, in order to get some stability. But we'll see if this actually does change behavior on the part of business executives, on the part of consumers, to start spending money again and start getting that cycle moving again in terms of activity and commerce.